Good evening. Tonight we're talking about an issue that affects each and every one of us one way or the other. The Indian rupee now stands at 68.79 paise to the dollar. It reached an all-time low earlier in the day as it hit the 69 to the dollar mark due to high crude oil prices and weak macroeconomic fundamentals. Now, the recovery that we've seen from the record lows this morning have been aided by dollar selling intervention by the RBI. That is what Reuters has reported. If that's true, how long can that intervention continue and at what cost? So the big story, the Indian rupee breaching the 69 rupee to a dollar mark, the level for the first time today on Thursday. Yesterday on Wednesday, remember, it closed at a 19-month low of 68.73. The Congress and Twitterati are reminding Prime Minister Modi of his tweets, mocking his predecessor, Dr. Manmohan Singh, when the rupee was stronger. But politics apart, how does this affect you? A report.
Amit Kumar says about a year ago he decided to go to Canada to study. With the rupee slumping against the US dollar, he is glad he chose Canada. But now even the Canadian dollar has become expensive and he is worried.
The overall budget, what I calculated, it was around 45 lakhs. And right now, if I calculate, it is around 50 lakhs or more than that. Before we thought about to take the loan, we will not get the money from the bank. Again, it is big burden for my father. I have to return them as already I promised them.
With the rupee falling to a lifetime low against the dollar, the cost of studying in the US will go up by 7 to 8% for the nearly 2 lakh students who study in the US every year.
One engineering graduate aspiring to go to the US for higher studies told NDTV she would defer her plans. For now, she plans to take up a job with the MNC so that she can save up some more.
In the last 1 year, the rupee has slumped to an all-time low of 69 against the dollar, the lowest in 19 months since November 2016 when it had hit 68. The rupee has taken a hit due to rising crude oil prices on the backdrop of US sanctions on Iran and outflow of dollars from foreign institutional investors. They fall a huge concern to those planning to study abroad, especially in the US, and those planning to take a holiday there. Experts say over the last year or so, Indians both in the US as well as in India have been looking towards countries that can give them permanent residency, like in Australia or Canada. With the dollar becoming more expensive against the rupee, the shift even in students making a choice about where to study may shift away from the US, they say. In Hyderabad with camera person Nagaraju, Uma Sudhir, NDTV.
Right, so there are various reasons for this, not all of it in the government's hands. Rising crude oil prices, the trade turmoil between the US and China, the US's sanctions on Iran, the ultimatum to allies, including India, to stop oil imports from Iran, and of course US President Donald Trump's tariff wars on many of his neighbors. But the question is, can the Indian government in any way arrest the slide? We'll have joining us Vaibhav Agarwal, he's from the BJP, Mohammed Khan, who's from the Congress, M.K. Venu, founding editor of The Wire, and Gurcharan Das, author and columnist. Mr. Das, let me start with you first. So we've just given the basic reasons. I've said not all of it is in the hands of this government. How much of is this a time for alarm right now, given that we know our current account deficit, yes, it is increasing, but it's still below the 3% alarm mark. We're strong on foreign reserves. So really, is this time for the alarm bells to ring?
No, I'm not alarmed. Frankly, I've believed for a long time that the rupee was overvalued. And the priority for the country is to get back to 8% plus growth. And no country can sustain 8% plus growth without exports. So really, if I would say one of the weaknesses of the last 4 years of this government has been the weakness of our exports. And Achhe Din, which was promised, Achhe Din are going to come with jobs, and good jobs come with exports. And so I frankly feel, I think for too long our rupee was overvalued. Smart countries don't allow that to happen. China is a very good example. And so I personally think that there is a degree of recovery that's going on in the economy. The US dollar is also been weaker than we had expected. Yes, oil prices are going up, and they are a cause for concern. And
considering we're the third largest importer of oil, 3/4 of oil is imported.
I would say that we should focus on other factors of competitiveness as well.
Okay, so Mr. Das is basically, Gurcharan Das, you're basically saying the silver lining here is that this would give a fill up to exporters. M.K. Venu, what do you say to that? This, actually the positive is that our, the export industry will have an advantage. Is that true?
See, Sarah, currency is not, any number of economists will tell you that currency devaluation not the only factor which impacts exports. Exports are driven by a whole lot of other factors. Your competitiveness, your infrastructure, low cost infrastructure. Do you have that? Do you have competitive capital that the manufacturers get who export? So here is what I would say. In 2013, we had a fairly strong devaluation. If you remember, Raghuram Rajan did a fairly good job of stopping capital flight, because of taper tantrums. Similar situation.
Sure.
Today we have exactly similar conditions. In the intervening period of 4 years, we've had negative export growth. Tell me any economy which shows robust GDP growth with negative export growth. I have not seen this correlation. So there's something seriously wrong with India's ability to export. And in this period, other competing Asian economies have done better export growth than us.
Okay,
and at this point in time, the risk today, Sarah, is that Paul Krugman has said that across Asian economies, there is a capital flight towards US because US is raising interest rates. So there is a scare, and India will be caught in this mini Asian financial crisis, which Krugman says could visit this region. If that happens, then India will suffer. There is no way India will come out of a broader contagion.
Okay, but you talked about other competing in countries that are also exporters. So since we're talking about the value of the rupee, how are these other emerging countries or other countries that are exporting, our competitors who are exporting, how is their rupee doing? Because if everybody's rupee is falling, then nobody has an advantage, so it doesn't affect any one of us.
This is what I'm saying. So, for instance, China, Trump has imposed massive tariffs in China. What has China done? China has devalued its currency to counter the increase in tariffs, right? So, it is making its own exports competitive. So, to that extent, India will also have to devalue. So, you're again level. You don't have any particular advantage vis-a-vis China because everybody is devaluing. So you're in the same boat in that sense, right? So that's one factor. And more importantly, Sarah, recently Bloomberg gave a very interesting report, Moody's Investor Services report, which said India's external sector vulnerability is the highest along with Indonesia's, and they define it as the total reserves that we have. 74% of those reserves are of 1 year residual maturity, which means they are short-term debt which can go out in the event of a crisis, capital volatility and global crisis. So 74% of our reserves are in the nature of short-term liability of 1 year, less than 1 year. Okay. So this I think is also a high risk factor for India.
Okay, Mr. Das, can you respond to that? The question I asked about other countries that are also exports, how are their currency doing? Are we the only ones whose currency is falling, or is everybody's falling? Because that would make a big difference, because we are the worst performing in Asia.
Well, I mean, Venu is right that there are a lot of factors besides currency that account for our export weaknesses. And we really need to focus on that very, very strongly and regain export momentum. I think that I wouldn't get so worried between comparisons here. I mean, the dollar was supposed to strengthen. It hasn't strengthened the way it did. And so I personally think these are the currency reflects a lot of short-term issues. The bigger threat is the oil price rise and the fact that we are on a rising cycle, and that cycle may take longer to correct itself when oil prices
So
start
it's not correcting itself anytime in the near future. Mohammed Khan, come in over here. Many of these, the causes for the price, the value of the rupee falling is not in the government's hands. And actually, the fact is that the inflation is better now than it was under UPA 2.
Right. I think that if you look at that as an index, then of course we would be charitable to them. But I think otherwise. First of all, let me tell you something. This government does not get to enjoy the benefit of saying that because of macro and external factors today we are faced with this challenge. You don't get to say that because in 2014 when you came, you were blessed with extremely low oil prices that rivaled those of almost a decade and a half back. $40 a barrel for over 3 years. What did you do with that opportunity? 2015 was a bumper year for economies across the world. Economies were rising everywhere. But because you shot yourself in the foot with first demonetization, then a hastily implemented GST, the economy did not grow and you had to reset the bar for how you calculate GDP. You set a lower basis so your results would appear higher while delivering lower growth. On the subject of exports, of course exports would rise if our exporters weren't caught up in the muddle that is GST. Do you know how many exporters are awaiting input credit, the money that they put in that hasn't been returned to them? Go ask the brass manufacturers of Moradabad. Ask the people who are at the head of the export industry how they've been choked for lack of funds over the last year. And the government, Mr. Hasmukh Adhia, keeps promising that this is a problem they'll address. They haven't. Sara, I will not give this government the credit of allowing them to say, oh, external factors. I'm sorry. The economy has never been your priority. We've seen this over 4 years. Look at what's happening over the last week, Sara. ये नौटंकी चल रही है about emergency.
Okay, let's get Weber in. Let's get Weber in. Weber, the economy has never been your priority, says the Congress, and many on Twitter have pulled out an old tweet of the Prime Minister where he accused the UPA and the former Prime Minister of the same. He said that look at the value of the rupee, it's going down, which means that this government doesn't value the economy. It has shown mismanagement of the currency. So by that logic, the same holds for this government. They've been completely mismanaging currency.
Oh, if it was up to Congress, I think the government should resign immediately and get back to the elections. I think that is what Congress wants us to do, because Congress, by attacking us on no statistics, no numbers, and baseless
give us the statistics, Vaibhav. Give us the statistics.
1 minute. Yeah. 1 minute. I'm not going to get into the number game, because then the numbers get disputed again that, okay, this number is from this source and this number is from this source. But let's look at it from a larger perspective as to why the rupee devaluation is happening. I'm not going to get in whataboutery. I'm not going to get in who said what and what specifics. That's not the kind of politics that I do. You know that very well. So my learned friend Mohammed knows that very well as well, and I respect.
All right, Vaibhav, get to the point, please.
But the point is very simple. When we do a reality check versus the rumors that the rupee is falling, we need to understand why is the rupee falling. The rupee is falling on 4 major perspectives, and the rupee is not just falling in India, but there is a yuan. Chinese economy has been seeing a downturn, and the yuan got devalued to more than 50% in past 10 days, and that has impacted exports and imports across the world.
Let's just pull up a graphic. You say you don't want to talk about numbers, but we do need to talk about numbers. This is the debate about numbers. The yuan is down 1.8%. The rupee is down 7.7%. It's almost down 8%.
Yeah, but because
let's not compare with China.
Because we are dealing. But we are dealing. Economy is not something that we can fix overnight. But we fixed it overall, like you said. That we've already. One moment, Mohammed bhai. You said that we've already. When you compare the inflation index in 2013, it was 12 point something. Today it's 4 point something. When we look at the GDP numbers, it is more than the expected growth. So when we look at domestic market versus international market, yes, the numbers will be different. The market, the export market, and the capitalization in the Chinese market cannot be compared to that of the Indian market.
All right, let's get Mohammed get a quick response.
We just can't fix in the
very quick response to you. First of all, remember, when you make extraordinary promises, don't be surprised when people have extraordinary expectations. So this is a crisis of your own making.
You're referring to the fact that the PM promised rupee would be at 45 to $1.
Remember the great economist Narendra Modi went about saying our businessmen will not be able to compete internationally. Wise words. He should remember those now. But I want to tell you something.
But Mohammed,
there is a Morgan Stanley report that in March of 2018, above $23,000 millionaires have left this country. There is capital flight, as Mr. Venu was telling you. There is an enormous capital flight taking place. Entrepreneurs are leaving. You're choking the system. You talk about mudra loans, for God's sake, say as creating jobs. You're faced with a crisis of epic proportions, and that's why your colleagues are desperate to distract attention.
Okay, one second. Vaibhav, I just have a question. You know, the fact is we are in an election year, which means there is political uncertainty, which normally what happens, we've seen the world over. Well, normally what happens, what we've seen the world over, is that foreign investors pause because nobody likes to invest at a time of uncertainty. So it is a catch-22 situation for the government, isn't it? Because it doesn't look like things can improve in the immediate future.
No, it isn't. There is no political uncertainty. It is certain that the Bharatiya Janata Party led NDA will come back to the fore and establish
foreign investors don't know that.
Having said that, I respect your point and value your point and you're making. See, you understand that while there is a equity FII sale on equity in the equities in a sell-off mode, there is also a lot of investment that is coming in. And then this devaluation is not happening only in the Indian market, it is happening across the world in different currencies in different countries. So the proportionate impact on the Indian economy is actually will not be felt before next 3 years. And we are talking about 3 to 5 years of a vision in terms of devaluation. This is not tomorrow's effect. So it's not going to impact the Indian economy. We will not see a slowdown because it's a proportionate decrease and a proportionate change in the overall pricing index.
You know, Sarab, Vaibhav says that it's not just India from where capital flight is happening. It's true. We've witnessed the highest FII debt outflows since 2008, the year of the financial crisis. All other economies are also facing it. So that is, he is citing that as a positive point. I am saying that that could create a contagion because
no, it won't.
It could.
Because it is not going to give us a spiraling effect.
No, Vaibhav, listen to me. Just listen to me.
Vaibhav, hold on. Let him finish his point.
Listen to me. No Nobel Prize winning economist Paul Krugman has said that there could be a mini Asian financial crisis of the kind we had in 1998 across Asia. It will affect India too. So I said, don't be complacent in the hope that everybody else will also get affected, because the US is raising interest rates, and the recent Fed Reserve monetary policy suggested they will be raising interest rates faster than earlier anticipated. So there is a problem that we are facing. And none other than the RBI, our own RBI governor, wrote a piece in Financial Times saying that if the US raises interest rates at a pace higher than earlier anticipated or earlier envisaged, then there could be capital volatility. This is something our own RBI governor has recognized. So these risks are there. So let's not sort of underestimate these risks.
Let's look at the situation. Mr. Das, let me go across to Mr. Das. Mr. Das, adding to this whole problem, is it adding to the whole problem the fact that we don't have a full-time finance minister, chief economic advisor is leaving? We don't have a chief statistician either. The government hasn't appointed one. Is that an area also of concern?
Well, I mean, one should always have people. But you know, where I began is where I am still at the moment, that I wouldn't worry very much. I personally think that we needed a bit of correction, that there are many factors for competitiveness, that India will only create the right kind of jobs. Our problem is not unemployment, our problem is underemployment. Exports helps you to create the right jobs. A rupee that is, I still think we are still a little overvalued.
So you mean it's going to drop further? It's going to hit 70?
I beg your pardon?
So you mean the rupee is going to devalue further, it's going to hit 70?
Well, I think it could go down a little further, and that wouldn't be too bad. You know, you're worried. You started the program with people talking about how much more it will cost to have an education in abroad. But really, it's the jobs that we should be interested in India. And the jobs are, it is
Where are the jobs?
No, can I say something on jobs quickly?
Where are the jobs?
Can I say
That's
something?
a very good point, Mr. Das. Where are the jobs? That's the one promise that the Prime Minister made. The Congress talks about promises. The one promise the Prime Minister made, that you don't want to talk about numbers, but the numbers are showing that the jobs aren't being created.
They acknowledged it in January of this
year.
year.
Last quarter we added 5 million jobs.
What was promised?
What are we talking about?
Weber, let me
What
break it to you.
Mohammed, go ahead.
Yeah. Weber, very quickly. I'll tell you where you stand on jobs, okay? In January, after 3 years of denying that jobs were an issue, the Prime Minister first constituted his Economic Council under Surjit Bhalla and those two others and brought them together to address the issue of jobs. Up until that point, you and your colleagues kept going on about the fact that no, ye to mithya hai, Mudra is creating more than enough jobs. Let's forget the fact that Mudra, an average Mudra loan is 43,000 rupees.
Last quarter we've added 4 million jobs.
Till date, with the economic slowdown, with the fact that GDP growth has slowed down, with the fact that you have to tweak numbers to posit higher economic growth, jobs have actually been wiped out. The informal sector has been wiped out, and those jobs have not returned to the economy.
And you speak wonderfully, and I respect your viewpoint.
Weber,
but
I have only one question to you.
And I don't want to get into numbers, but you're pushing me into it. Let me remind you that in 2013, when we took the government, what was the value of the rupee now, Sarah? Would you have the data there? It's
Why don't you show
72
Narendra
rupees for
Modi's
goodness
tweets?
sakes.
Well, it's at the lowest now.
It's the lowest.
It's the lowest now,
It's the
Weber.
lowest in record, Weber, right now.
Don't go into whataboutery when you're debating with...
No, not whataboutery. Every
you
statement
know,
given by
I
a
will
learned
debate
Prime
with your
Minister and
numbers, I
great
will have
economist
my
Narendra Modi has come back to
Where
today.
we have to wind up. I want to just
on every one of his
all
own
right,
metrics he's
Weber,
failed.
Mohammed, 1 second. So, MK Venu, now oil prices are also going up. I want to just bring in it's not just an economic problem, there's also politics involved. The fact that Trump is putting pressure, Nikki Haley today also mentioned it to the Prime Minister, that we need to cut back on our imports from Iran. Is that even possible? We're the third largest importer of Iran oil. Is that correct?
See, Sarah, you're right. All this will lead to what? How will it impact our politics? You know, if the rupee devalues further, say suppose we cross 70, then we've already done about 7% so far. Suppose we do 10%. All that adds to the cost of translates into higher cost of import. So oil prices are going up on the one hand, and the devaluation is a double whammy. It's adding further to the increase in the inflation, and how that inflation will translate into items within the economy through transport and various other mechanisms through which it gets transmitted. So it's bad news for the ruling party in a pre-election year.
That's okay. So they're in a tough spot, and it's going to be tough to get out of this. Can the
and they don't want to reduce the excise duties to give benefit to the
their options
consumers.
are few. They're being squeezed politically too, and it is of their own making, says the Congress. But Gurcharan Das says that the dollar could weaken further, could hit 70. We should perhaps expect that. We're completely out of time. Thank you for joining us on Reality Check as we try and look at this issue from all angles. Thank you and good night.